Life insurance is certainly one of the best ways to take care of your family's future in case of any eventuality. In fact, it is considered as the most important investment as it works towards their safety. It acts as cover that saves your family from being deprived of material necessities that they may require in your absence. Hello, and welcome to this episode of Financially Speaking, conversations powered by India First Life. I'm your host, Gargi, for today's podcast. There are multiple myths around life insurance as a product. However, as a smart investor, I need to be aware about correct information to make my opinion. To decode these better, I have reached out to Mr. Samir Gupta. Samir is Senior Vice President and Head Strategy for Bank of Baroda channel at India First Life Insurance. He has a rich corporate experience for more than 25 years in this industry. Welcome, Samir.
Thank you, Gargi. Well, the purpose of life insurance is dual-fold, is to ensure that you are protected against adverse events, and death is one such inevitable event. However, as you correctly mentioned, one needs to properly understand life insurance, as it is a product that not only covers life, but also gives multiple benefits as a great investment option.
So let's get started. I have always seen people buying life insurance just as a tax saving product. They say it is only useful after policyholders' death. Please tell us, are these myths?
Yes, absolutely. There are many myths around such a great product. Let me tell you one by one. Myth number one, life insurance is only for tax savings. Well, the tax deductions under sections 80cc, which we are all aware of, is not the only advantage of life insurance. In your absence, the payout from your life insurance policy will cover the monetary needs of the people who are dependent on you. The maturity benefits from your insurance product can act as a corpus for many financial goals. Myth number two, life insurance will be useful only after the policyholder's death. Depending on the type of life insurance plan selected and its specific features, apart from providing a financial safety net to your loved ones, life insurance plan can be useful in other situations as well. Retirement plans helps you enjoy financial independence in the later years of your life. Term insurance plans with critical illness riders help meet the exorbitant expenses of medical treatments. You can also utilize endowment plans as an asset building tools. Not only your nominee, but even you can profit from a timely investment in the right life insurance product. Therefore, to say that life insurance is useful after the policyholder death is definitely a miss. Myth number three, young and healthy people do not need life insurance. Life is full of uncertainties. Accidents can snuff out the life of even a young person at the peak of health. In the early stages of your career, you do not have the chance to accumulate a large corpus through savings alone. But life insurance ensures your family does not face a lack of funds. Moreover, young people have to bear a lower cost of a premium compared to what they would have to pay when they're older. The best time to buy life insurance is at a younger age when you start earning. This way, you can get substantial coverage at a lower cost. So it is always beneficial or advantageous to start early. Another myth is getting life insurance is troublesome. Well, the internet has simplified every aspect of life today, including purchasing of insurance. One need not be dependent on agents or wait for appointments from your insurer. After you compare insurance online, all you need to do is visit the web portal of the insurance provider of your choice. You can calculate the premium that you have to pay using online calculators. Then you have to answer some straightforward questions about your health conditions as well as your personal preferences and profession. After that, you can upload your KYC documents and securely make an online payment to buy your term insurance easily from the comfort of your home. Myth 5, only financially well people can afford life insurance. Insurance policies today offer extensive coverage at reasonable prices. One can research online for customized plans that suits every budget. You can start with a lower sum assured and then build up additional coverage as your income increases. You can also opt for a term life plan. Term insurance typically provides a large sum assured for a lower premium.
I've heard these so many times, but it is so reliable to hear busting these myths from an expert like you. Also, you just said that life insurance is completely affordable financial product. So, what are the factors that affect the life insurance premium?
Well, Gargi, there are five major factors in my mind that affect premium part while purchasing a life insurance policy. Let's take it up one by one. The first and foremost is the age and gender. From the insurer's perspective, elder individuals in their 40s or 50s are more prone to critical illnesses. This increases their liability at the insurance end. Hence, the 40-year-old can get the same policy and afford it for a longer period of time in comparison to a 50-year-old. Also, gender is one of the underrated factors influencing the insurance premium. It does matter. Its importance is based on the statistical data that shows women have higher life expectancy than men. It also makes them eligible for a longer policy tenure. Now come to the family history, which is again a critical factor. A certain hereditary diseases tend to pass on to the next generations of a family. Similarly, people in a family might become vulnerable to specific diseases because of shared lifestyle choices. All life insurance companies consider these risks as a part of family medical history and then offer life insurance plans at predetermined rates. Another factor which is equally important is the medical records. Individual medical records also play a vital role in determining life insurance premiums, because the underwriting process of most life insurance plans include medical tests. These tests are meant to highlight a clear picture of your health and pre-existing diseases, if any. Another factor is smoking or drinking habits. Whether an individual consumes or smokes tobacco, there is a higher risk of suffering from critical diseases like lung cancer, oral cancer, and heart-related problems. The impact of these habits is nearly the same for both men and women. Since smokers are more prone to health complications, insurers do charge a higher premium for life insurance plans. The best way to lower your term plan premium in this context is to quit smoking and live a healthier lifestyle. Premium payment tenure. Okay, this is one factor which I would like to talk about is the life insurance policy tenure also plays a critical role in determining the insurance premium. Choosing a longer tenure implies the risk is spread over an extended period, which allows the insurer to offer policies at a lower rate. I hope I have covered the majority of the factors which do influence the insurance premium.
Definitely, Sameer. We tend to neglect these factors, but it is truly important to consider and understand these well. Now, tell us, what are the ways to reduce the life insurance premiums?
Understand any insurance plan that one opts for should be seen as an investment, especially with the monthly or annual premium payments. Additionally, it is possible to further reduce the premium payments with a very simple ways. Start with buy life insurance at a young age. The best way to lower your premium is to buy it in the initial years of your career. The younger you are, the lower will be the premium payment. For people looking forward to knowing how to reduce life insurance premium, this is the easiest and most fruitful way to ensure financial security and peace of mind. Second, choose the ideal policy term. The tenure of your policy plays a major role in determining the amount of premium. Thus, one must consider the policy term while buying a life insurance policy. The longer is the term of the policy, the lower will be your premium. For instance, if you are a salaried person, then it is advisable to take the coverage till the age of 50 or 60 years so that you can meet through all your liabilities easily. And last but not the least, follow a healthy lifestyle. A healthier person will get to pay lesser premiums. As insurance companies nowadays are in fact incentivizing and giving attention to the medical history of the policyholder. Thus, it is good to maintain a healthy lifestyle.
Great. And are there any additional ways to reduce the premiums?
Well, compare policies before buying a plan. This is yet another way to reduce term insurance premium, but is often ignored. Some people end up buying a term plan based on ads they find or recommendations from peers, not realizing their actual needs before making a decision. Comparison of term insurance policies can make you move a step closer to understanding which plan suits your needs the most. If affordability is a concern, you can also check for the benefits offered by different plans in relation to the quoted premiums. After going through the in-depth details of various plans, you will be in a better position to reduce your term insurance premium. Another factor which you may consider is in avoiding selecting add-ons that you do not need. You can further strengthen the benefits of a term insurance plan by including additional riders with the base policy. For instance, critical illness and disability rider provides financial security against medical emergencies resulting from life-threatening ailments. Similarly, there are other add-ons like waiver of premium and return of premium, which you can add to a base policy. However, these add-ons are available at an additional price above the base policy premium. Hence, one way to reduce term insurance premium is to only opt for add-ons that you truly need and can easily afford. The critical part is that you should be able to continue paying your premiums to enjoy the benefit of the policy. This will help you know how to reduce term insurance premium. Last, maybe the select yearly mode of premium payments. Instead of opting for monthly or biannual payments, one should choose to pay annually. This option may actually help to save some money. While the payments made in quicker succession are easier on the pocket due to a smaller sum, these premium payments can add up and can actually prove to be a larger sum than if one were to make a yearly premium payment. It may be a larger sum, but it could be more helpful in the longer run. On the whole, the correct information and right research will help you find the best policy, which can save thousands on your premiums. Thus, you must consider these mentioned factors to reduce your life insurance premium.
Samir, these are really helpful insights. We hardly consider these factors while purchasing the life insurance policies. Thank you so much for your time with us today. I'm sure our listeners must have gained a lot of important factors from the discussion.
It was a pleasure to discuss such a crucial aspect of life insurance purchase cycle. I hope I have helped you to gain better understanding regarding how you can save the premiums on life insurance.
Yes, and thank you to all our listeners. You can find more such episodes on YouTube and on your favorite podcast app. Keep listening.